Well, it's tax season. It's April. A lot of trial lawyers are going to be writing some big checks thanks to some good years and some good cases in 2012. But anybody who's talked to their tax professional, anybody who's working on a case in 2013, people are becoming painfully aware of the fact that not only has the federal tax rate gone up dramatically, but many states have also increased their tax rates for the highest earners, the so-called millionaire group. And also that there's another tax that has dropped in addition to the Medicare taxes, the new 3.8%, we'll refer to it as the Obama tax or the Obamacare tax, that now is something that people have to take into planning consideration when they're looking at their taxes for 2013. I'm happy to report, just as we have in prior years, and we think we're going to have an awful lot of interest and inquiries on this year, but attorneys are still one of the very few groups in the United States, trial lawyers, who have the ability to structure their money and spread their tax hit out over time. It is a time-tested technique. It is past all the compliance hurdles. It's offered by the major insurance companies that are still writing structured settlements, and it's a pantheon. It's a who's who of the best financial companies out there. And the opportunity to take money that would be taxed at the highest possible rate and spread it out into future years is something that trial lawyers absolutely have to take advantage of. Now, we know there's reasons why you don't. We know that you've got case financing. We know that you've got expenses. We know that there's all kinds of different things that come up. But we're really going to spend a tremendous amount of time in 2013 working to educate trial lawyers and their tax professionals on how this works and the ways that it works. So 3 quick tips for this week for tax planners and trial lawyers to keep in mind when it comes to structuring legal fees. Number 1, we are dealing with people who are being taxed at, in most cases, unless you are in a state with no state income tax, if you get $1 million case, you are almost certainly going to be paying more than 50% marginal rates on that money. Anytime you're paying more than half of what you make because of being pushed into a millionaire bracket or having a 1-year event where you're in that bracket, that's money that if you take it and you get constructive receipt of it, you owe the taxes on it and you're going to write the check. There's a certainty of it now. It's not something where we think this might happen. We know it's going to happen. We know what the tax rates are. And you have to start planning, understanding that those rates are there. So educate yourself, meet with your CPA, meet with your tax professional, know what your tax bracket is, and take a look at your case inventory. Look at what's coming in this year and begin to plan to see whether structuring and spreading this money out over future years makes sense for you and will push you into a lower bracket. We're not talking tax avoidance here. We're not talking about a tax dodge. We're talking about careful, systematic tax planning and cash flow planning. That's what these plans offer for trial lawyers. Second thing is, we want to get you off the financing treadmill. We know that a lot of people who work on large-scale litigation, mass torts, complicated medical malpractice and product liability cases, you have a lot tied up in these cases. Years of financing and funds. Many people use legal finance firms. They're expensive rates. I won't even refer to it as a necessary evil because I don't want to imply that they're evil. They're a source of funding. But if you want the opportunity to get off that funding pipeline, you've got to take a look at what you're actually paying in taxes when you settle a case. We have many trial lawyers who will get a case, settle it, and by the time they've paid their expenses, by the time they've paid their taxes, and by the time they've paid their financing back, many of them are at zero or even underwater. I mean, that's how dire the situation is for a lot of people. To avoid or to reduce or to eliminate the tax hit in that year in which you receive it gives you many options that you wouldn't otherwise have. So if you want to get off that financing cycle of boom bust and essentially working to pay everybody but yourself, just give us a call, have your tax professional call us, and let's take a look at what you can do with your situation, with your inventory, and help us to begin to work with you. No other firm does as much work with trial lawyer financing and trial lawyer retirement planning than Wallstrom & Associates. We keep everything in complete confidence. We have a wide range of options that people can utilize. And we really do encourage you to contact us and talk about and discover what those options are for yourself. And finally, we're going to give you one little quick tip. A lot of people don't realize that using a structured legal fee and spreading it out over time, if you simply take the money that you spread out over time and allocate that money into a retirement plan, just do the math. You're taking fully taxable money and you're putting it into a tax-deductible retirement plan, whether it's a standard 401k, whether it's a profit-sharing plan, whether it's a defined benefit plan that allows outsized contributions. You have the ability to shelter this money from a one-year windfall into future years and to plow it into your retirement plan. It's the best single option you have, and we encourage every single attorney to talk with their tax professional or whoever handles the tax planning in their firm and investigate whether this is an option for you on the cases you're working on. That's it for this week. You're going to hear a lot more about structured legal fees here on the Settlement Channel for the rest of the year. I'm Mark Wallstrom, President of Wallstrom & Associates. Thanks for joining me, and we'll talk to you again next week here on the Legal Broadcast Network.